there. Okay, I've started the recording. So this one, just as we'll look at a crypto first and foremost, but I gotta update all the different things I've given. So this one was a fat short for anyone that actually took it. I loaded up a CFD account literally just to short eliminate a long XT. So the lemonade short and then the XT long, XTI. So you can see my entry is not perfect, right? Not the exact area where I was saying, but that's because, like I said, when you're looking at active order flow, you're not going to set limits, right? Because when you set limits, you're not. When you set limits, you're trying to predetermine what's going to happen. Order flow hasn't backed that data yet. So when that data is backed, which is what we get, when we actually get the bids coming through, right? Whether it's the buyers or the sellers, once that confirmation is complete, that's when I'll typically enter like bigger positions, right? So again, this one, we went over in stream, right? The entry, and it's nice as a educational standpoint to actually show you how these plays can end up playing out. Because I don't know everyone's going to take it every single time I call something, right? Because you might not be there in the moment, it might not be an asset you're looking at, but the entire reason I ever call something or I ever give a entry trigger, give it invalidation for anything is all going to be technical. I'm not giving any fundamental reasons behind why I'm going long or short, so on and so forth, right? At a bare fundamental level, you could talk about, seasonality, so on and so forth if it comes to crypto. But then this entire thing here, there was nothing fundamental about it. This was all simply technical, right? We know we completed the ABCD. 382 full extension was hit 3.618. I'm not touching a short at 3.618 simply because there is nothing screaming weakness here, nothing, right? So I don't care if I don't give a top short. I'm not going to tell you guys to short something when it's such in such an established uptrend, and it's got no signs of slowing down, right? Which is why I didn't call this. So what I said was, look, the 3.618 has been hit. We're going to keep an eye on the structure that's going to come in because that structure is going to determine what we're going to do. If we'd now gone, and like I said, if we just started to reclaim this area into support, I wouldn't have shorted, right? Because then, the trends are going to continue on. We're probably going to break past the 3.618, and then we would have gone to take out those wicks on the left that we were looking at, right? So the actual external liquidity, which is right over here. But the fact of the matter is, when we went to our technical area, we didn't, right? We didn't reclaim, right? The buyers couldn't reclaim that into support. What we got was trap traders and a revisit to those trap traders to see, okay, do they have the sort of power to actually go and overwhelm us, right? And they didn't. You went and the same area where the trap traders were, you rejected off it, and you rejected off in doing so the 3.14 as well. And now you have a much cleaner, much more powerful reason for why you would take a short in this particular area, right? And that is the reason why I was saying, look, if you're going to take a short on this is the area. And validation is if you accept above, but your entry is if you go and reject here, then you're going to be rejecting the 3.14. You're going to reject off the area where the traders were trapped in terms of actual active orders, and therefore you'd have a reason, easy invalidation, easy reason to actually get into shorts here, right? Very similar to why I gave that warning when Bitcoin hit our key level, right? Which you're going to look at in a minute. But again, everything I do is technical. There is no fundamental reason why I did this. It's just everything I do is technical analysis, right? Because that way, everything is clear cut. You know what the invalidation is. You know what you're looking for to actually get into the trade. And then after that, it becomes easy to hold, right? But yeah, we'll switch over to crypto now, but just wanted to sort of update this because this is from a TA standpoint, this is just perfection, right? It's perfection. Came back, reconfirmed the false breakout of your parallel channel extension by the 2.5 right over here. So everything about this was just perfect. Chef's kiss in terms of TA. I did open the CFD. I don't normally do CFD trading, so I loaded some money into this one, literally just to short lemonade, bro. Which is why I've never shared this particular account before, right? This is Sorry, but I'm dying. Um, but yeah, you should give it a go. By the way, bro. Rohan, you should give it a go. 212. It's really really good. It's a really really good exchange to use, man. It's amazing. But enough of that. Just a quick sort of educational and also like a update on Lemonade, right? Since this is one of them challenge accounts, when that happened, I did take more profits on the actual challenge account itself for Lemonade. So I have 25% remaining of the original position size, right? Obviously, we took 50% off when we hit the 2x, and then I took another 50% off when this sort of lower high came in right over here and also opened the short. But yeah, we'll take a look at some stocks in a minute if you guys want, or one other day. Doesn't have to be today, but let's focus on crypto for now. So, from last stream, I bet some of you are really glad we did that Bitcoin chart build out, right? Because again, it shouldn't be a surprise why we've gone to where we have. First and foremost, the parallel channel that we drew on last private stream, we've hit the low of it. Okay, that's the low of the parallel channel. Second, what do we have? We have a load actually, so let's go through it. Okay, is this for? This is Binance. Okay, let's look at this first. Oh wait, I'm in the wrong one. Bunker. Remember, this is the box I drew down last stream, saying like ultimately this somewhere here is where I'd want like the macro higher low to come in. Basically the next bear market bottom for Bitcoin, right? The quicker we get this done, the better it'd be in my opinion. Although if this is going to be anything like last cycle, I'd want something like this, right? If this is the first big drop, which this is the first big drop, right? One more peak up. It doesn't have to give us a new high, but like I was saying, right? What I would want is, now that all of this low has been taken out, we're well within the mid of the previous consolidation range, right? So if I was to do that for the previous consolidation range real quick, like say from this high to this low, there, literally hit the mid of the previous consolidation range. I'd want to move up. First, let's get 73K back into support and then make a shot back up towards like 105 or something. I still stand by that. If we can get back towards 105, that'd be amazing for a lower high, just because I would get my oh so lovely macro inverted smiley, and I would short that with everything I had, right? If we got that. Of course, depending on, I'm not going to set limits with everything I have, right? You guys know I don't do that, right? But we'd go there, literally same textbook of what we've been doing year in and year out. Go there, analyze the price action at the area, and once we determine an edge, we go in with that edge, right? That's it. But yeah, this was a nasty sell-off. Now let's take a look in terms of everything we've done, right? So this is the Binance chart. Let's take a look firstly in terms of buy-seller zones and stuff. So what is this? That is, if I didn't mark it out, it must be the 12-month fair value gap. So you just about front ran the mid of the 12-month FVG that we drew on, right? So that's one. In terms of buy-seller zones, right, you're trying to protect the 2024 12-month macro buy zone mid. That's what you're trying to do. You front run the zone between the 12-month fair value gap mid and then the 2021 12-month seller zone mid, right? That's been a front run. But this is very much a retest of previous all-time highs and previous now consolidation range, right? So this is not an area we're looking for shorts, guys, okay? I know I don't need to spell it out to you guys, but anyone, if I catch you guys looking for shorts over here, I'm going to be very, very disappointed, right? Scalping, again, that's a different thing, but you're not going to be waiting here on the sidelines and then shorting when you go into previous all-time highs and previous consolidation range mid, right? You do not have an edge for a short here. You do not have an edge for selling your spot bags or anything like that over here. There was time for that, right? We talked about all, the key levels being lost, the bearish back test. We talk about that all the way up to 115 to when, if you're going to get out, when should you start layering out, right? This is not the place where you layer out. If anything, if you've got a super long-term vision, this is the kind of place where you probably want to snag some, right? But, yes, at previous support, right, we tested the mid of the consolidation range. That's the reason we've got this bounce, right? So that's buy-seller zone. So let's take a look. Fib speed resistance fan. A beautiful thing. You've hit the 618 and the 66. Okay, there's the 586. So you've hit the golden pocket. You've hit the golden pocket of your macro 50 resistance fan. You've also hit the golden pocket of your macro pitch fan. And this is from like literally your range low, high, low, your yearly low, right? The golden pocket has been hit. So you can see in terms of intersections, we've hit a massive intersection, absolutely huge intersection, right? And this is the intersection we were talking about when we drew this on last stream. So in terms of the parallel channel, like I said, you nearly hit the low, right? Just about front around the low of the parallel channel itself, the most recent parallel channel, right? So currently your buyers are trying to stabilize around, of course, the front run of that range extreme because you haven't actually hit the range extreme yet, right? But in terms of diagonals, this was a very, very big intersection for us. If I zoom in, you'll be able to see it much better, right? There you go. So to the T, right? There you go. That's the macro picture. And this is also why I go down to the one, to the low time frame to actually anchor these points, because you can see how accurate they can be if you anchor them properly, right? I know it's tedious, but the reward's worth it. Again, we can see why it's resistance is because you're at the top. You're using that parallel channel as resistance, and also the macro 50 resistance fan 618, I believe this is either the 618 or the 586 as resistance. So if you want to have a shot to next leg higher, obviously we need to go and confirm this area as support. Because if you do that, your next set of intersections is going to be basically up to 77k, right? But diagonal is extremely powerful. So in terms of diagonals, in terms of buy-seller zones, we can see why we've come to this particular area. Trend-based sub extension, just trying to hold the 764,786. Your macro fib retracement, the 0.5 has been hit. In terms of your macro fib retracement, your macro trend-based sub extension, the liquidity rate, right? In this case, the front run, since you're coming at it from the top side, the range extreme has also been hit. So all I'm trying to do here is point out all the different confluences that you guys can see in this particular area, right? So our last area, of course, was when we were looking at it over here, right? Because what we had was this. We had this extremely pivotal low. Bitcoin was trying to hold on to this area when we were last looking at it. We were literally right over here, right? We were saying, okay, if you can hold on to this, right? And this is the daily buy zone. As long as you can stay above 74,309, you're looking for scalp longs to the upside or scalp the swings to the upside. But if you get below that, there's no point holding longs. And you can see why I said that. And you can see why I am a sole technical trader. I'm not going to give you fundamental reasons behind why. Fundamental, some bullshit reason why. Everything is very, very line in the sand. Your line in the sand here was, like we were discussing last time, this macro key area alongside that area where you had that daily buy zone, right? The daily buy zone where we know buy stepped in. As long as we stayed above that, you were in the clear to look for scalp longs to try and get that fair value gap, perhaps higher if you can get above it. But if you get below it, there's no point holding, because below that, what do you have? Your previous consolidation range, right? And so it's not a surprise then again why I always tell you guys to think in terms of ranges as well, which is where the whole key inflection area historical price range methodology I created from, right? If you think of this into a range, if this range high is lost, where's the next range low? Right over here. Therefore, there's your range. You go to the range mid. That's exactly where we're bouncing off of right now, like we just saw, right? So there was loads of technical reasons why this is the area where you're bouncing off next. Does that mean the bottom is in? God knows. This is relentless selling. We're in a downtrend, right? So, on the lower time frame, if you can scalp long this, that's fine. I'm in a scalp long from like 62k, right? Simply because, like I said, the mid had been hit, so on and so forth, right? But I'm not in any big swing positions, right? I'm not going to do that. If I'm going to enter any big positions, it's going to be purely spot, and I'm not going to do that yet because I want some sort of confirmation. Go look at any time in history. Hardly do you ever get one big wick like this, and all of a sudden, oh yeah, the low has been captured, and we're ready to go, right? I don't care if I have to buy spot, even if you go and reclaim 74k. I'd rather have that sort of structure. I'm not going to knife catch for spot, right? Because at the end of the day, look, you no longer have the argument for a monthly high low. Not compared to that. The monthly trend has been broken. So even if you get a continuation to the upside, you're not thinking, oh, it's going to give me new highs, right? You're not really thinking that because it has so much adversity to face in the face of putting in a new high. Right, lower highs are going to be relentless. Right, anytime, as soon as momentum from the buy side dwindle out, sellers are going to step right in because we've broken trend. It's as simple as that, right? So, yeah, let's see. Also, remember the trick. If you want a really nice area, one area I'd be watching right off the bat is somewhere around 82 to 79 to 87 if you want a wider range, 82 to 85 if you want a tighter range, right? Again, if your trend is strong, chances are you probably don't even get above this, like we've seen time and time again. I explained it in that private stream I did a few days ago, right, for Bitcoin. So if you guys are confused with what I mean, just go to that or go to the core session for fibs. But yeah, 38234. Even if you get a move up, there's no guarantees we're going to break past this. Right, so let me delete that. But BTC, yeah, let's see, right? Do we get it? So what I want to happen, like I described last time, what I want to happen is I want Bitcoin to sort of range here. I want this to reclaim, go back towards 105, and then distribute like a higher time frame inverted smiley would be class. And then I want this to just go, final leg down would be from there. That's what I want, right? And in that moment, when Bitcoin is sort of making this move back up and ranging, is when I'd want alts to give us that final push up, right? Quote unquote, the quote unquote alt season everyone's waiting for. Now, this might be optimistic of me, but typically for alts to go, what you want? You want Bitcoin to stabilize, right? You want Bitcoin going sideways while money isn't leaving the system, right? So if we can reclaim 74, right, then I'd want Bitcoin to sort of just go sideways, not really give us anything crazy for a little bit, maybe a few months, right? Where I don't care even if it's just a month, where I want altcoins to just give us some nice gains, right? Get a reaction of these lows, right? Just to get a reaction of these lows, just to confirm buyers are indeed looking at these absolute gutter prices where we are, right? And then once we sort of hit that lower high, distribution's finished, it's been confirmed, then to get one, like the big nuke down towards that big red box that I marked out right over here. That's what I want, right? And again, why is this the area we're fighting? Don't forget, we already have this area marked out. This is the area we're fighting because, what was this? That is, one sec, I need to do this. I just realized. Let me go to, oh yeah, that's fine. Remember, even within the fair value gap, we said there is a particular area that's going to be very key for us to watch. And what was that? The point of control from your 2024 yearly. There's your 2024 yearly candle. There's the point of control from your 2024 yearly candle, right? And that is why we are trying to stay above right over here. Big liquidity grab to the downside, right? But this is the area ultimately that everyone is trying to fight over. If I go down to the hourly, you can see. In this hourly candle, you can literally see buy step in. Look, where's the most traded? Where's your fair value gap? No fair value gap, sorry. Where's your point of control, right? Where's your value area high, value area low? Your value area is literally right over here, right? That's why we're fighting so hard to stay in this area. That's also why, even though it's not exact, look, that point of control, support, is because this is such an important level, right? A confirmed level at that, not just a random level, but a confirmed level. So yeah, if you can stay above 66, we're going to get some reaction to that. The upside, we might come back down, create some sort of lower time frame structure before going up. But you can fire off shots from 66 if you want to. Invalidation is, if you turn this to resistance, you get out. If this is support, you can scalp along to the upside. Right? This is a beautiful area for us to watch. But do not be a bear. I'm speaking on the lower time frame basis, of course. As long as you're above 66,986, I wouldn't be like a lower time frame bear. Okay, because this might give us a relief bounce back towards the 80s, like I said, before putting another lower high in and then coming back down, ranging, who knows, right? But currently we are trying to reclaim. On the daily, we haven't done so yet. Right? We've been poking ahead above, but we're trying to get above that very key area we marked out last time we did the private stream, which is the yearly point of control right over here. So, all in all, BTC, I think for now, as long as we're above 66,986, I think the worst of the dump is behind us. I think we're going to just have a low volatility environment for a bit before we have some sort of recovery back to the upside. Maybe 80, just 3.234 first. If we can get above that, maybe I'd love 105, 110. Really stop out anyone that's been short on this way down. You know how this market works, right? And then give us a macro distributive lower high with the inverted smiley. That would be textbook in my opinion, right? That would be textbook perfection for what I would want to see to trade a chart, right? Doesn't mean we're going to get exactly that, but now all of this, in my opinion, you know what I mean? It makes sense for me to punish. For me, it would make sense looking at this. Let's go punish them. Let's go punish the late shorters. Because if you look at that, we know there's a lot of aggressive shorts coming in. Exactly how the late longers always get punished. Let's punish the late shorters. Let's get another macro lower high going, and then give a bigger nuke down when the people once again coming back like, oh, that was just a liquidity grab, we're going to go higher. Lower high, hit the actual key area, but I think somewhere between 50 to 30k. I don't know exactly where, because there's so many key levels there now that it's just a shot, right? It's going to be somewhere in between this area. I don't say exactly where. I'm just going to buy spot once it gets there. I'm just going to lock in when price gets there, unless structure tells me, oh, it doesn't look like we're going to get there anymore, right? But yeah, Simple as that for Bitcoin. Like nothing's changed since last stream. The only thing that's changed is that monthly low we were looking at to fire off lower time frame trades, right? The invalidation for that was hit, right? Like as long as you were above that monthly low, you could have taken your scalp to swing longs to the upside. As soon as you get below that, you're out. There's nothing below that. You wait for your next key area. Your next key area was, of course, the yearly fair value gap mid, which we now see we bounced off, right? And it was also right over here. It was the yearly fair value gap mid, which we bounced off, and also that point of control, which you're looking at right now, right? So let's say that's a zone. If that's 66,986.05, 66,986.05, I'm just going to do this. I'm going to go here, somewhere in 2024, 66,986.05. There. So this sort of area. Really, this was going to be a key area, right? There's your 12-month point of control, and then your yearly fair value gap mid. So this is the area now where buyers and sellers are both going to be absolutely juking it out. Like you can see that happening right now on the lower time frame. You'll see it happening over the course of the next few days as well, right? And one side ultimately is going to determine, do we go higher, do we go lower, right? If sellers relent and buyers win out here for now, then we have a shot at re-attacking 75, 74, so on and so forth. And if we can get back over 74, that's when you have that shot of actually hitting the 382, right? From the high to the low, we're looking at the shallow golden pocket, and then we can readjust when we get there. By the looks of things, there's a fair value gap where that is as well. So if I do this, yeah, there you go. So there's a fair value gap where the 38234 is, right? So that's going to be a very beautiful confluence area for us to watch, 83.84. If you get above that, I'm under the belief you get the 100Ks again for the lower high, right? Stop all the people that are short from here, punish some people, and then just nuke it back down. But if you don't and we can't get up above, then I'm not waiting for 105. If you get distributive structure literally coming in at the shallow golden pocket, which we know is not uncommon, right? If the trend is strong, then the market participants are going to jump in at the shallow. That's just a fundamental law of fibs. Then that's just where we'll take the next set of shorts, right? Because I'm out of my 90K short that I gave the entry trigger, the entry area, the invalidation and the validation trigger for in Bitcoin chart, in the Coinbase chart, right? The one I gave in the Bitcoin channel. I'm out of that one, right? And the dash short as well. I closed both because, like I said, I'm not going to hold shorts right now approaching macro support areas like this. So what if it could go to 44K when it could go back up here and then back down, right? That's not what leverage is for. I'm just going to get out and I'll just look to re-short whenever we go back higher, or off these key areas, so on and so forth. But that is Bitcoin. So does anyone have any questions before I carry on? If not, I can move on. I want to look at ETH as well. I'll look at some macro charts. Tara asked me to look at some like Bitcoin dominance, USDT dominance, so on and so forth as well.
Oh, I got a question.
Mm-hmm.
So when you put fine lines in the sand, like 66,986 for that like point of control, and you're looking for it to either bounce off of it or a rejection to cut and close.
Yeah.
Like I know it's a little like a objective yourself or subjective. How do you what time frame are you doing that on? And like, how many do you have, like a candle limit or something like that? Like you look for a reclaim immediately if one candle closes under it, or if you see a wick reject off that line and it was kind of like a clean hit, and then you see it close another one. Is that when you cut it? Because I know you like playing candle closes, right? When it's weekly, monthly. So do you do that the same for scalping?
Yeah, for scalping, like I mentioned before, I'm actually mainly focused on ticks, which is going to be different to time-based candles. But for time-based candles, the principles are going to be pretty much the same. For time-based candles, I'm looking for, so for example, if I want to enter this trade, right, on a long side, and I was looking to enter something fresh here, I'd want to see either something like a extremely strong bids from buyers, right, that is being rewarded, where you see, okay, no, there's sellers active, right? It's not just buyers active, there's sellers active as well, but the buyers are just blasting through them, right? Something like that. I'd want to see a bid or auction from the buyers that's being rewarded, right? And then, a candle close above, and if you get the retest, that's fine. If you don't, and you see like a point of control being created, fair value gap being created above the key area, let's say, for example, there was a point of control being created, right? So if I know this is the tick-based chart, so let's see if this will work. I lost it. Right, I'm just gonna go onto the market for now. One sec. Wait, it's because I'm on the crypto chart, isn't it? Yeah. Let's go here. Okay, there we go. So, right, so what are you looking for in this situation, right? Do I see anything that would make me perhaps take a long if I wasn't already in a long from slightly lower? What you see here is, you see something like, and in fact, let's change the resolution to 8,000. Yes, no, that's nice. If I want to go long, I want confirmation. Ultimately, it's like think of it in like steps. What's the reason for you to go long? The reason for you to go long is that sellers are not being rewarded at the particular area you're in. Fundamentally speaking, buyers are winning out over the sellers, right? So then everything I look for in terms of price action is going to be building on that thesis. So you'd come here. What the hell? One sec. Sorry, guys. Let's do 2,000 then. Okay, perfect. So when we come over here and you're looking for signs of buyers being in control of this area, just one candle breaking above 99% of the time is not enough to really confirm that buyers are in control of a particular area. Right. So for example, here is your first candle that actually broke above. Now I'm not gonna take this particular candle seriously simply because this is on the tick based chart, right? It's on the tick based chart, and even on the tick based chart, we're barely keeping our head above. So this is not a candle that I'd be like, oh yeah, I'm gonna long off this particular candle, because you have all your fair value gap in one range. You close within your fair value gap or below your point of control. So there's nothing here screaming, oh yeah, buyers are 100% in control. Right, so if you open along here, it's a coin flip. It could go up, or you could have a candle that goes straight back down. There is no probable edge in going long in this particular candle. The following candle, obviously you're not going to long something like this. This candle is not telling you whatsoever that buyers are in control. Right, you have, if anything, an absorption of buyers. Right, both absorption of buyers, sellers being rewarded in this particular candle. So there's nothing in this candle telling you, yes, this looks like a really, really good long. So you close below. So you will not enter a long based on this because you're below your key level and all the price action that's come up to this point, right? Yo, bro, I can hear you now. What are you speaking?
Did your mic just mute, Leatherman?
Can you guys hear me? Oh. Can you hear me, bro, Auntie?
Yes, we hear you, man.
Okay, I think it might just be your
We hear you.
Okay. Thank you, brother. Yeah, I'll wait for Auntie to get back and then I can resume. Can you hear me now, bro? Auntie?
Sorry, I'm so sorry. I would go back.
It's all right. No problem at all. So I was saying you were not long off this candle. You were not long off this particular candle right over here. Because there's not, if anything, this is sellers being rewarded, and this candle's come out of nowhere. Buyers are once again stepping in, but again, now longing off this candle, you don't really have an edge, right? Because now if you're looking for a scalp, if you enter here, if you're wrong by about 0.71%, and for me, for a scalp, that's a bit too long, right? Especially if you're scalping with like high leverage, basically with a high position size for a lower time frame. That's a pretty wide margin in my opinion. So if this rallies on to the upside, it rallies. It's whatever. You can try and take a long if, for example, this value area gets 50 support, but it didn't, right? The following candle came back down. And then what the following candle did is it went and it finally tried to retest, right? It retested that particular area. Now, I don't know why this candle is printed like this, right? When all of this is showing, but this is basically telling you that, yes, there is a retest happening to that key level. And for now, the retest is successful. Right? Sure, you will not particularly long this candle, again, because you guys are getting used to this. You're below your point of control, right? You close below your point of control. So yes, even though we have a successful retest, you can wait simply until now you have this cluster right here. Here's a point of control, here's a point of control, and now here's a fresh point of control. You need to get above this cluster if you want to long, or you long as close to this level as possible for a scalp. Right?
Would those be considered like trap longs or absorbed buys because they're at the higher point of the candles, right?
Yeah, so on a lower time frame, you could call them trap longs, but I would not call them trap longs until you break 66,986 to the downside. As long as you're above 66,986, there is no real threat of being forced out of the position, right? So even if you're long here, as long as 66,986 in this case, if we're saying that's the key level, is being held, right? Whatever the level you define to be significant, as long as that's being held, you're in no real threat of being stopped out. If you start turning this to resistance, that's when you would call them properly trap longs, because they are now on the wrong side of where you would be in that trade. It's fine to be on a long as long as you're above 66,986. But if you turn that to resistance, well, your whole argument for why you would long here in the first place goes out the window, right? Because you don't have a quote unquote significant level here anymore. So we get another candle down, and this time around, you are seeing signs that you actually want to see. There is your retest. You get below 66,986, but look what happens. You close above your entire value area, right? Your value area high, value area low, point of control, you close above all of it. So now you have this area where before there were, sellers, there were very clearly sellers here before. But now you've retested that area, you've retested 66,986, you've closed above your key level firstly. Secondly, you've also turned what used to be bearish value area from this area back over here into a bullish. So now if you want to go long, you go long, and invalidation is simply if that point of control / value low is lost, I'm going to absolutely cut my position. As long as you're above that, you scalp a position to the upside, sorry. Right, so your entry would be this candle here. And as long as this low here is safe, right? As long as that's not, you're not breaching below. If you want a hard stop, you just put it below that. If you want like a manual invalidation, you say, okay, if you start closing candles below this, I'm going to cut. But as long as now this is safe, you have an extremely clear area on the lower time frame about where you're going to be placing invalidation. And as long as you're above that, you would stay in your scalp long. Because you no longer have a 0.7% on 100x leverage, that's 70% drawdown, right? But now compare that to this. If you enter, as soon as this candle closed, your drawdown is a quarter of that, it's 25%, right? A third of that rather, sorry. So that is much more manageable. TA-wise as well, it makes much more sense to enter here, where you have a objective, sellers being shut out by the buyer scenario. And moments like that is where I'd be watching and entering longs if I was to enter this particular area, right? And then, once you go, since it's a scalp, you can close either on an RR trade. So if that's 25%, if you make 50% to 75% on 100x move up, you take either partials or full position. And, or the other thing you can do is as well, if you've got the time and you've got the free time to look at it, just keep an eye on how the candles develop. If you see anything like this, massive buyer absorption right over here, and then a confirmation of that value area high now being resistance, that is very clearly a waning of strength, right? Whatever came in here. So you would fully close your position, whatever was at 66, you'd fully close it by 67, right? For a scalp. So everything, again, very technical. You notice all I'm doing is analyzing buyers. I'm analyzing sellers. That's all I'm doing, right? But I'm doing it based around key levels for actual entries. And after that, for TP, so on and so forth, you just wait until whatever direction you're going in, the momentum wanes. And that's your trigger to just take profits. If you don't want an actual line in the sand, there's no guarantees your next key level is going to get hit on the lower time frame, right? You could go halfway and then collapse back. But that's what footprint charts is for. You can see if you see that momentum waning. Very clearly, we had strength, all buyers being rewarded, and then massive absorption. And not only that, but a confirmation, right? A confirmation that value area high is now resistance, right? So a confirmation that this area where the majority of trading activity happened is now resistance. You have a confirmation of that. So then that now is a very clear sign of momentum waning. And then again, you can even use things like, I don't know why that's not working. Maybe it's because it's a tick-based chart. But if you were to go to a time-based chart, that'd work. But you'd see aggressive, the bubbles coming in, right? Market order bubbles. You see longs coming in, not being rewarded, and therefore you just take profits off that. But the area doesn't change, right? Because you notice now when you come back down, same area. Do we see buyers being rewarded? No, because look, yes, this candle looks similar to exactly right. The candle looks the same, but now look at the value area. Right, the point of control is here, sure, but your value area is so wide that there is no clear edge defined within this candle. You're saying 70% of trading activity occurred within the top to the low. So there's no majority of the trading activity took place here, buyers closed above it. There's no edge like that, right? And everything below is sell, sell, sell. And then therefore it's not a surprise that this ultimately leads to one more breakdown before going higher, right? Again, trapped, but then you go on the retest, you turn this into support. And if you're watching this, sometimes you're not going to catch that because that was a quick retest, even on a tick-based chart. Unless you're on unless it's like a 10 ticks or unless you're on like a 10 tick chart or something, you'd have caught that, but not on the 1,000 tick chart. And in moments like this, like sometimes you're not going to catch like the perfect trade. It's what it is, right? But that's also a part of the game. That's also part of actually figuring out how we're going to be trading, is knowing when am I going to execute versus when am I not. This candle, in my opinion, that's way too wide for an execution, right? Unless you're thinking now of a not just like a scalp position, but you're thinking of, can I maybe do something wider? If you reduce your position size, that's a tactic you could employ, right? If you think, okay, I don't want to miss the potential move up from this level. If you see a candle like this, where clearly the retest has happened, then what you can do is reduce your position size to adapt for the fact that your stop loss is way wider, right? So if you now want to be in a long and you want to get long off a candle like this, one thing you could do is reduce your position size. The second thing you could do is just figure out where your value area is again. So for example, for this particular candle that retested, this was your value area. If the value area is hold to support, you long as long as the value area is support. If the value area is lost, you close out until it's either reclaimed or you go back down once again to your key level. So we have tools, we have ways to navigate the choppiness of the lower time frame. It's not all just like static levels, right? Because the most powerful thing we can do is actually figure out what kind of orders, what kind of sentiment is going on in the market right now. And we can only do that through order flow and proper order flow. Not like, people look at, traditional candlestick patterns and call it order flow. It's not. For proper order flow, you need these tools. You need the footprint chart. You need the TPOs, right? You want to look at VLO, so on and so forth. These are order flow tools. But yeah, does that make sense, bro? Or anyone else as well that's in the stream listening in? Does that make sense?
No, yeah, so much. How much am I limiting myself not doing volume profiles on tick-based candles? Am I kind of counteracting being on the 3 minute, 5 minutes?
No. So you can easily trade successfully based off just time-based charts. So do you know the difference between tick-based and time-based charts?
Yeah. These are based 1,000 orders, right? 1,000 orders hits a new candle.
That's it.
Or 1,000 ticks.
Yeah. So tick-based charts are transactions, right? They're showing you. This is not showing you time spent. This is showing you transactions. Now, the thing people mistake is they think it's just like 1,000 Bitcoin. It's not, right? Each candle does not represent 1,000 Bitcoin. It represents 1,000 transactions on Bitcoin. One transaction could be 0.1 Bitcoin. One transaction could be 1,000 Bitcoin, right? We don't actually know the underlying number of Bitcoins that's been transacted per 1,000 transactions. This is simply showing you every time 1,000 transaction is hit. That's it, right? Now, the benefit of this is for low volatility environments, tick-based charts are going to be really, really slow, right? They're not really going to print anything. So you can physically see when there is volatility in the market versus when there is not, right? And when there is volatility, all of a sudden you're going to get very, very active, just like this. So for time-based charts, when there's low volatility, you get all of these candles, most of the candles are useless. They're just there because they're representing every time a minute's passed or hours passed. But if you have a week of no volatility, the entire subset of candles within that week might as well not be there. It's useless, right? So tick-based charts kind of overcome that. Another thing is this is like, when you look at time-based charts, when you're getting above or below, you're doing so off the last price traded, right? And that's, of course, that's going to be how tick-based charts work as well. But more importantly, when you see tick-based charts, you're physically seeing, is the orders to the upside or is it to the downside, right? When you get to a particular key area, how much volume is coming in, how much transactions is coming in, how much market activity is coming in around that key area, right? Is the buyer strong? Is the seller strong? You get a much more intuitive feel for that on the tick-based chart than you do the time-based chart, simply because of the nature of what the tick-based chart shows. It shows you the number of transactions that's been hit. Right, so if you go to a key area and you see 1,000 transactions are coming in and they're all green candles and the red candles are being absorbed, then you know buyers are absolutely bidding the hell out of that key area. It's harder to see that on the time-based chart because you have no idea how much volume, how much transactions actually coming in on a time-based chart, right? All you know is the price that's going up and down within that particular time frame. So for that reason, for lower time frame, I absolutely adore the tick-based charts, is what I typically use over time-based charts. You're still using a time-based charts to get your key levels, right? Your yearlies, your 6 months, your 4 months, your 3 months, so on and so forth. And you can use your 1 minute buy sell zones if you're really, really scalping on like absolute degenerate levels. But for executions, I think tick-based charts gives you an edge over time-based charts. Yeah. But you can make time-based charts work like perfectly fine. There's loads of people that make time-based charts work. But I think for how I look at the market as well, it does help out in like sort of it fits in with my way of like thinking about the market, right? So
Yeah, they just sound like they align so much better with, order flow, right?
Yeah.
Now you're using transaction candles or ticks over time based with order flow.
Yeah, that's it. But yeah, it's very very useful. Did you have any other questions, brother?
No, not really right now.
Yeah, that's fine.
Thank you, man.
No problem at all, brother. If anyone else has any questions, just put it in chat. Okay. Otherwise, I'm gonna quickly look at Ethereum. I don't think I'll have time to go full on into.
I'm just looking now on this situation, and it doesn't look like has been retested. So I'm just staying. I know this sounds, I'm not
Do you,
happy with.
do you refer? Yeah, are you referring to this 66K level here?
Yeah.
Yeah,
I
so
feel like it's just jump above, but it's not retested.
Yeah, so I think let's
from the
check.
top to the bottom, is it something like this?
Yeah, let's see. So if we go lower ticks, on lower ticks we've definitely retested here, as you can see. Break above, retest, and go. We just haven't done so on like the higher. So on something like 100 ticks, you can easily see like the retest has happened right over here. It hasn't happened on like the higher time frame. So we might get like an hourly check back to this at some point today, right? And if the hourly check back is successful, then you would take that trade off that like lower scalp the swing or just scalps off that area. But for more resolution, of course, you're using so you can see as I go to 10 ticks, definitely that's a check back, and on the check back, buys have defended this level, right? And that is what we have gone off. Now, if I was to switch back to something like 3 minutes, you can see 3 minutes definitely hasn't given us a check back. What about 1 minute? Even 1 minute hasn't really given us a check back, right? It has actually, no way, 1 minute did. I missed that. So 1 minute gave us a check back over here. So you had the 1 minute retest in this case for a scalp, right? But you can see the tick base chart gave you way nicer, right? You could see going up, transactions coming back down, buys basing at that level and then going up after. So that's the benefit of the tick base chart over the time based. Your entries can be like quicker basically with tick base charts. But yeah, 1 minute gave us a retest. But like you said, we haven't had it on like a high enough time frame. So if we go to something like the hourly, I do not think we've retested yet.
Can I add to this retest question?
Mm-hmm.
You use stacked imbalances, right?
I do, yes.
Yeah. When you talk about V bottom shapes and past tests like these big macro bottoms, you talk about how stacked imbalances, they sometimes not all of them want to be filled, right? Them getting defended by orders above.
Yeah.
But that's a scenario like right here, possibly, right?
Yeah, so I don't actually see any. Wait, hang on. Let me check my settings for stacked imbalances real quick.
Or like we don't get that retest and like they trap shorters down here, for example.
Yeah, so I think if we're talking stacked imbalances, I'm going to have to go for higher time frame ones. So if I was to. Oh, wait, let me change this to 10,000. And then we go to something. I don't think yearly had any stacked imbalances. So yearly didn't have any. What about the 6 months? Yeah, on the high time frame, we don't really have any because it's Bitcoin. Obviously, we know it's not a choke coin, right? This has a load of volume coming in, so it's going to be hard to find stacked imbalances on the higher time frame. I'd think maybe weekly and lower is where you probably see the stacked imbalances.
Anyway, because
we would take it over to like Ethereum to kind of check these levels.
Yeah, I'll
if
check
we were
it
using
after this.
imbalances.
Yeah. Eddie Cobra, what were you going to say?
yeah, it's just because generally the market is not giving so easy longs. I wish to be like this, but generally what they're doing sideways, and after that they trap the longs and the short, and they're going down, they're going up, so they can accumulate the liquidity and so on.
That's
they give
it.
it's going down, and
yeah.
people they just panicking, or the long is they panicking, they go out. So if they don't create this kind of diversion, it's just like. And after that, you need to look on the long, because on long time frame. Because if you look on the, you go mental, it's like, what is here, man? It's just
lower time frame is absolutely crazy. So unless it's going to be even on lower time frame, just like people think, oh, I'm just going to log on today, I'm going to trade like 10 setups. Now, sometimes you get no entries whatsoever throughout the course of the day, right? You can't trade every day.
Big backs, and say, you know what, this is very good spot because if things is going lower, it's just I can lose like 10%, 20% because I'm winning generally. Let's say, I don't want to head headaches. You have a lot of money playing,
Yeah.
as you wish. Yeah? But otherwise, it's crazy, the market. So I feel like, now going boom up and, taking, it's just playing, people to just saying, okay, I can long from now is going up. That's, I believe, that is working the market. It's a crazy thing, it's just, that's, I
Exactly.
believe, maybe I'm wrong.
Yeah. So yeah, that's why I always just preach: just have your significant levels. Just analyze. If you're going to take a trade, don't do it in the middle of nowhere unless you have a very good read on the current price action. And even then, accept that there's going to be problem. Even if you read it everything quote unquote perfectly, they can always just fuck it up and send it against you. There's no guarantees of a win. All you can do is manage your risks at key levels, right? The reason that I would confidently enter a trade in this particular area is because I'm confident in my ability to see this as a significant level. If I was not confident that 66,986 would be a significant level, I wouldn't take the trade here, right? So that's why I wouldn't take a trade in any of these random areas like 66. Like I'm going to take one when I see huge, like absolute insane sell pressure with trap traders coming in, which is why I longed around 62 yesterday. But I'm not going to long in the middle of nowhere like this or like this, where there is no reason to. You're not trying to come up of a trap sellers. You're not also at significant areas. So unless you have a very good reason for why you're looking for a long in a particular area, it's better just not to be in one. Like 99% of the time, the best trade is to take no trade, and I can guarantee you that. Most people probably ended up with less money now than they did at the start of like the bull run. And if you think about that, that's absolutely crazy, right? We're saying we've had a very good market for the past 2.5 years. But yeah, it's just the nature of the game, like I say. Trap sellers, you see like insane like seller absorption. I'm going to take a long, right? And the next area to execute is going to be like around this key. Between there, I don't give like I don't give two shits what's happening between there. Okay, so so again, that's the reason I closed my shorts in this particular area, because the selling that's in the face of all this selling pressure, that's the first candle you had where it was like, whoop, the buyers are stepping in now. So I'm just going to take some profits on the lower time frame, right? That's why, and then enter like a scalp long on that lower time frame as well. Because on the higher time frame, you're in a key area, and also on the lower time frame, we see now that the aggressive sellers are not being rewarded at this particular candle. So that can indicate like a shift in momentum for the time being, right? But yeah, again, so that was a clean, right? Because again, I know many people didn't actually take the short because one sec, if I go back to candles, I know a few people took the short, I know a few people didn't. That's okay, right? If you get another lower high, you'll have opportunities to short, you'll have opportunities to long. But that short, that was a very, very you can see rather how powerful these volume levels are, right? Because again, this area where this lower high came in, I marked that out weeks in advance, right? Weeks in advance, saying, look, in terms of Coinbase, hang on, when did I actually say it? Let me check real quick. That was in. So the actual levels was 22nd of November 2025, right? And we hit it in 15th of January 2026. So basically 2 months, in advance, right? I gave those levels saying, right, the next level high, the first potential area is going to be 95 to 96. Right, and we had a fair value gap just above. So, deviation around the area, but that's the area where we're going to look for shorting. And then when we hit that area, you simply analyze, okay, what's going on? Is buyers in control or is sellers in control? And then that is what you base your trades off. So if I was to go here to master list and go to Coinbase, because it's this chart right over here, this level right here is what I'm referring to, right? This one was given months in advance, November. This happened mid-January right here. And again, what we have, range, you can see range. I did absolutely nothing that range. You guys know I gave no Bitcoin calls or anything like that. This range, all I said was, look, there's a 4-hour mitigated order block. We're just going to use that as range mid, so high, low, right over here, and then we got the actual hit to the target. And then when we hit that, I say, look, we're at resistance. This is a good area if you're not in any hedges or any shorts. This is where you would want to get into some. Because again, if we SFP is what I said, this is going to be horrendous. And guess what we did? Right? No matter where you look at, 3 days, so on and so forth, SFP'd. Right? Even on the daily, that's a rejection. Right? Up, straight back down again. And then consolidation below. Not bullish whatsoever. Right? Just a lower high. You grab liquidity from this range and then you die. Right? So, and now what we hit, 22 to 25, standard deviation 1 value area high. We've hit other key levels low. So look, another thing I forgot to mention, this low right over here. Again, this is given way in advance, right? If you go back to the same Coinbase chart, if I forward it into general so you guys can see it. There you go. Right, this one right over here. The 2021 volume levels that were given on the left, right? All these volume levels below. Guess what we've hit, right? We've hit now. We sliced through 22 to 25. We sliced through 2021 all-time high, which is a standard deviation 3 range high. So now we're at standard deviation 3 range low. That's what we bounced off. Coinbase standard deviation 3 range low, right? And now if we can get above 69,000, like I was saying, this area right over here, even in terms of volume, it's an important one. If we can get above it, we're good, right? We're good to go back to 74. And if we can reclaim that, then we get our shallow golden pocket. But if we can't, then this can chop us here lower time frame wise, even have a wick down, one more wick down towards like 58 even, right? 58,014. Wouldn't be surprised if we hit the standard deviation 2.5 next, right? And then perhaps after that, after a local range is created, after enough liquidity has been accumulated in this area, then they send it up to the shallow golden pocket, another drop down and then up, and then you know how they do it, right? It's a whiplash. But it's the levels we're using. There's the same levels I printed back in November, right? November of last year. Nothing's changed. You can see it to the decimal place. Nothing changed. All the levels we printed in advance. Now we simply wait and analyze price action as price goes to those key levels. Don't forget, we have the Binance levels as well. So if I go to volume profile, which is here somewhere, let me just find it here. And then I go to Binance. Don't forget Binance and Coinbase. Those are the two big ones. I've not really done one for Bybit. Where is Binance? One sec. Oh wait, I can do this. I can do this. Yeah. There's the Binance key levels, right? So again, even in terms of the Binance key levels, we've just about front run the next one. Another reason why I think 58 to 54 is a ripe target. Both Coinbase and Binance, as you can see, right? Here's Coinbase. Here's Binance. Both of them have significant volume levels coming up. So 50s, 40s, they're all dotted. Like that's what I'm saying. That's why I'm giving you a range where I think we're going to bottom. I'm not going to try to be a hero and be like, oh, 52,284.96 is going to be the exact low, because fuck knows, right? All we know is it's going to be somewhere within this range. Or rather, I hope it's going to be somewhere within this range, right? Because we know yearly key levels are there. We know yearly, there's a yearly value area there as well. Yearly volume levels are here. Buy-seller zones is here. Key inflection areas is here. Remember, key inflection area, we swipe down. If we can reclaim the mid, again, there's a shot we can go towards the 70s. But yeah, just a lot of resistance to deal with right now for Bitcoin, unfortunately. That's just a matter of fact, right? It's what it is. But yeah, this one was beautiful to see. Obviously, it's going to be painful, and I wish it hadn't happened, because I know, there's always going to be people that's buying that won't get rid of the bags in time, and they're going to be feeling the pain, right? But as far as TA goes, this was beautiful, right? The execution, this was beautiful. But yeah, I did close the Bitcoin short yesterday, because now that we're hitting these key support areas, I'm not going to be holding on to the longs and shorts, right? Oh, sorry, I'm not going to be holding on to the shorts from higher when we're at now, like pivotal support resistances. Many of you else have been in hedges as well. I see Rise ETH short. That's a very, very good short. And I see Jag, Gale, everyone's been in trading, Edico, Rohan. So yes, it's good, right? It's good that you guys are active. It's good you guys aren't just relying on a market being up only to make money. Because being a trader isn't about just trading the bull market. It's not about trading just the bear market. It's being able to adapt. That's the main thing, right? What's the market conditions coming out right now? Are we in an uptrend? Are we in a downtrend? And what are we going to do based on the market conditions we are in? Right? That's what we can do. So I think that's enough for Bitcoin. What I'm going to do is I'm quickly going to look at Ethereum for you guys as well, Bitcoin, ETH, and then I'll quickly look at macro indicator charts too. And then after that, I'll call it a day. I'll do like the altcoin streams and stuff. I'll do that next time, because it's getting what time is it here? It's 8:52. So I'm gonna get some dinner, get a workout in, and I'm gonna go to sleep. So let's look at Ethereum. Let's go to ETH. CME gap to the upside. Key inflection area lost on Ethereum. So until we reclaim that, I would do absolutely a grand total of 0 for ETH? Nothing. If you want to buy spot for the long term, that's different, right? If you're someone who, for example, wants to buy like $100 of ETH a day, right? Something very little, but you want to do it every day, you can do that, right? Because at these lows, realistically speaking, even if you feel the pain for now, if you believe in crypto and you believe that ETH isn't going to die and we are eventually going to break out to hit these higher targets, realistically speaking, just zoom out. It's not going to matter if you buy at 1,973. It's not going to matter if you buy 800, right? You're going to be in pain, especially if you go all in here and price drops 50%. Of course, that's why I'm not saying go all in here, right? But you could do something like $100 a day throughout this range, right? That's something you'd easily do, and you outperform 90% of people trying to time the bottom, right? But if you want just level to level, there's nothing to be done here because your key inflection area is literally just above low. You do not want to be in this below this. Same area where we opened up the second ETH entry. The first entry I gave you guys in March of last year. Damn, it's been nearly a year since that entry. Feels like yesterday that I gave that as a signal. That's crazy. It's weird for me. Like most people think about times in terms of like just the calendar and or so and so forth, your birthday. For me, I'm thinking like, oh my god. Like, it's been 6 months since I entered that trade or since I gave that or since this happened in terms of like trading. Everything I do revolves around trading. That's crazy though. That time went quick.
I was thinking the same thing the other day, that 1450 low, how it wasn't that long ago.
Yeah. Just feel love, but it's been nearly a year. Anyway, I see an M shape. Oh, beautiful. Yeah, I mean, look, there's M shapes. Like, there's 86 is being completed on ETH here. So we just need some sort of structure to come in, bias to actually like show that the M shape is being respected, right? If bias can defend the M shape and you go and reclaim this into support, again, there's absolutely no harm in buying ETH at this area. Invalidation would simply be if you get back below or buyers can't retain control of this area, just cut, right? There is an M shape. I'll delete that. And I'll do the next private stream I'll do for you guys. I'll build a completely fresh ETH chart out. Since I'm going to be putting this one public, I feel like I've divulged enough alpha for today, So I'll do this one for a private stream. I'll build the ETH chart out just like I did for Bitcoin the other day, just from like bareback, just absolutely blank screen to a fully fleshed out chart with all the trade ideas, so on and so forth on it, so that you guys can just execute. Oh, for the guys that weren't here for the last stream, by the way, me and Antti figured out that if I share the link with you guys, so once I build the Bitcoin charts out, I share the link in this general chat here. So if you go and copy that chat, you guys can have like all the different sort of like everything I've drawn on basically, so you don't have to do it yourself. So if you just scroll up in the general chat, it's going to be the 2 links for the Bitcoin charts I did draw out. So I mentioned it in the video as well, but just in case someone hasn't watched the last recording for the last stream, that's something you might want to do because it saves you the time of having to do it yourself, right? So, but yeah, ETH, don't get it twisted. That is an M shape, guys. Again, M shape completion is on where you go short, right? Yes, that's a bit of an extension. The 3.14. Realistically, we should be within the 2.620. Doesn't really matter, right? Realistically, the key thing is the HA6 has been hit, and now we just want to see this sort of hold, right? Sort of base. But yeah, for ETH, I don't need to look at really anything else. There's a very, very clear area right in front of our faces. As long as you're below this, I'm not going to be doing anything for ETH. If you get above, guess what? It's time to buy ETH again. Others might be selling, I'll buy off them. And if it gets below, I'll sell it back again. Doesn't matter. But if you go lower, then obviously the mid is going to be 1,500. That's going to be a full reset in terms of the late March, the mid-March sort of bids I gave you guys last year. Right, we absolutely cooked on that ETH one. And again, ETH was so beautiful because that was a 786, that was the mid, and we had weekly and monthly seller absorption, right? That's what I told you guys to get in this. And then when we sold, when we took profits, right? The ABCD, that 786, 1.272. Right? Literally perfect, right? 786, 1.272. Insanely, this was beautiful. This was wave structure. This was just art in motion for Ethereum. It was so nice. The low and the high, right? Both part of one big wave structure. Insanely beautiful. But in ETH, I'm going to keep it very, very simple though. I'm not even going to draw any more buy seller zones or anything like this. And I draw the volume levels on when I do the ETH chart. But right now, keep it simple. There's your key inflection area. Between 2050, 228, 2.21. And your mid falls around 2150.75. Ideally, you want that mid to be support, right? You don't want to turn that mid into resistance. You might get lower time frame moves up into that mid. If it turns to lower high, you have really good area to short, right? Look for your scalp shorts, scalp to swing shorts off that. If you flip it to support, you have good area to look for longs. But yeah, let's keep it very simple for ETH. It's at M-shaped completion, but below like a pivotal level. So we need to go and reclaim that as soon as possible. Nice little relief, but it doesn't mean much when the market's down by 80% and you get an 8% move back to the upside. But yeah, that's Ethereum. Very simple. Again, I will build the ETH charts out properly for you guys when we do the actual ETH stream, right? Or rather, when I do like a private stream, right? I'll build it out for you guys. But just in the meantime, if I go to, in fact, why don't I just do this? I'm just going to go to ETH, and then I'm going to do USDT. So it's going to be ETH Binance. And because I believe USDT has more data than just USD. This is an old chart. Everything is getting axed. I've not put this chart in a long. This is one of my old charts, guys. Massively old. Okay, so stay the same. Go here, 12 months. Monthly. Hang on, let's do this instead. Get off. There we go. Okay. Yeah, not good. Right. That, not good. This, you can see why that lower high came in there at the start of the year. Right. Again, point of control from 2024. Look, you couldn't close above that in 2025. Bearishly back tested on, in 2025, yeah. And 2026, we got the bearish back test of it. So if I was to do this, and that's fine. If I was to do this, ping it to this area, sort of. And let me just change the number of, one sec. If I do, is that gonna kick me out? No, it's not. I just want to be accurate. One sec. Why is it done that? Oh, it's because of the blocks, isn't it? One sec. So for resolution, let me do 5,000. Yeah, okay. So the actual tick is lower. It's only on the 10,000 that is up here. So 10,000 just made it ATR basically. That's up there. That's for the rejection. But if I go to something like 8,000 ticks, it's going to be down over here. Perfect. So this is the actual one. What about like 6,000? I just want to see at what point it changes. Okay, so 5,000 and above, and it's changed. I think it's to do with the number of data is processed. That makes sense though, because we want this to be, if we split it into 10,000, each block's going to represent 10,000 pieces of data. That's why. Okay, we're going to go with 5,000. Okay. Perfect. Okay. So there's a key level 2627. We want to be above that. We don't want to be below it. And that's the reason why you can see support, right? And right over here, that was your slice through. The main key thing is you didn't really get any sort of structure breaks as long as you're above this, but as soon as you broke below 2676, that's when you got the acceleration to the downside, right? Because again, that was your actual point of control on the yearly. And what we can do at this particular area is, again, we can do this. Just want to check something. One sec, guys. A bit curious here. So that number right there says 2625. Okay, I need to look into this one. Why have we got such a drastic change when I change the number of ticks in this particular case? I'm not sure. TradingView is still figuring out the nooks and crannies of their order flow system. But this is the proper one right over here. So that's going to be support, that's going to be resistance. There. That's going to be support, it's going to be resistance. It's going to reject us the first time we visit it, in my opinion, again. So that's something to keep an eye on. But I'll do a proper, like I said, I'll do a proper like ETH build out stream. Probably, well, I can't do it by this week. It'll be sometime next week, right? I'll do it sometime next week, in a few days' time. So not Monday, not Tuesday, probably around like Wednesday time, maybe like Wednesday morning or something. I'll do it sometime next week. That'll be when I'm free next. But again, this is the first time in a while that you've had aggressive selling coming in. And again, last time we had one of this, don't forget what happened. Don't forget, this by no means indicates a bottom, because you can have aggressive selling for a few weeks, right? But ultimately, once the aggressive selling subsides and a range is created, it's typically game over for whichever side aggressively sold the lows, right? So yeah, we'll keep an eye on this one. But yeah, so this one, I know we focus mainly on BTC again, but that's because obviously there was like questions, like loads of questions, and I want to answer those, make sure you guys understand everything. So I'll do the actual altcoins and stuff next stream. One thing I want to mention is hype. This thing, for whatever reason, is strong when the rest of the market is taking a collective shit. And then it's taking a shit, well, not taking a shit, but doing nothing when the rest of the market is catching up. It's almost like inverse. But the reason I want to point it out is, don't forget where you are. As nice as this looks, hype, this is what I want to see on BTC. So if you cannot get above here and you see a good RR opportunity for shorts, hype is at the area where, technically speaking, you have a potential inverted smiley being created. Right around here. So as long as you're not above 35.51, 35.51, yeah, that's the range extreme. As long as you're below that, you'll be biasing shorts, in my opinion. Right? Especially the closer you are to that, but below it, you'll be biasing shorts. If you flip into the support, you're running to 39. If you get above 39, well, it is, God knows, it goes towards like 48, 50, 59. So it's a very easy area here to try and manage for hype. Let's take a look on MACD slowing down, right? So you're starting to get some, locally speaking, you're starting to get some bearish divergence on the MACD. RSI, you're starting to get bearish divergence on the RSI as well. There's no higher time frame, there's only daily, but still worth noting, right? So keep an eye on hype, because you might be able to get a nice short off on this one. You had a trend line breakout, but you could, you know how they go. Half the time they trap you, and then they nuke it lower. Aggressive buy is not being rewarded right now, so keep an eye on this one. Line in the sand is 35.51. Because if you get above that, you're going to 39.65 as your next line in the sand, right? But as long as you're below 35.51, you're going to keep targeting 32. This cluster, if you break below this, then the next time around, I think hype goes to lower targets. And I wanted to go to lower targets because I want some sort of like M shape to hit on this. Trying to reclaim this parallel channel, but it's lagging my laptop out, so I'm going to turn it off there. But I swear there was M shapes on this piece of shit. One sec. Yeah. That's how deep is it? Well, the key thing is, was the 618 respected? That's all I care about. And the fact of the matter is, the 618 was respected. So at least the 786 would be nice, in my opinion. Yeah. Go 618's right here. Support. The rate to above. So the 786 would be somewhere down over there, like a Gartley, right? This could be like a nice Gartley, perhaps. And what happens if you move this over here? We have a 786. Or a potential butterfly, but I doubt it's going to be a butterfly, because that would, yeah, no, I don't think it's going to be a butterfly. No, yeah, forget that, it's not going to be a butterfly, so it's going to be something like this. Or, one sec. Yeah, so you have either a butterfly or a Gartley here, right? 886 if you put it to here, 786 if you put it from the left. So you have some nice M shapes, slightly lower for hype that I would want to complete to get like to buy some. So that's why I don't want to buy just below resistance. So what I'm saying, for shorts, you might have like good RR here. Just keep an eye on it. Like for now, you're either looking for one more visit up to 35, right? So this area, as long as there's resistance, you see aggressive buys not being rewarded. That's would be trigger to short. But right now, as we speak, your next trigger would be if we go and turn this area into, i.e., $32 into resistance. If that happens, that'd be your next trigger for like a scalp to swing short. My voice is just gone. Sorry, guys. By the way, bro, Bed Shaker, how did you get the Velo stuff into TradingView? Because I just saw the crypto chat and that looks insane. It's so helpful because for the normal Velo, like the website always I swear to God, it deletes my my template at least once a month, so I have to keep redoing it. But if it's in TradingView, I thought I was going to do that. So how did you get it into TradingView? Have they added like Velo as an actual indicator? Yeah, I think Hype's going to do insane when this bearish period's over, which is why it's one of the ones I really want to accumulate. So. Oh, okay. Yeah, I get you. It's because when you put it in a when you put it in a crypto chat, I thought it was all in sort of like one. Because I see like Bybit in the center, Velo underneath it, and then Velo to the left, and then Velo to the right as well. So I thought you were doing everything like through TradingView itself. But yeah, no, it's okay. I can look at one more. Let's look at Say. Actually, I'll look at Say and Tau, and then I'll call it there for today. Say, I believe, rated pretty much insane, bro. 2025 low got rated with force, insane sell pressure into the last area that we genuinely have on the chart before entire exchange listing lows get rated. That is nice. And so, come on, bro. Would 10 be enough? It's not like you have volume with you right now. Let's take a look. Yeah, that's nice. That's what you want to see, right? That's good reaction. Buyers being rewarded. Obviously, just one candle ain't enough, but look, there is absolutely zero harm in buying some Say for spot and just forgetting about it here, guys. Absolutely zero. If you want a hard stop loss, put it below 0.0640. You might get wicked out. I don't see why they'd leave this behind right now that they've come this low. So you put it below the 2023 low, right? Or you can have a manual, like just I'll sell myself thing where you're like, okay, if this area gets turned to resistance, I'll sell. Otherwise, just look at where you are. Look at all the aggressive selling into the low. Absolute. This is like tell this oldest time. I don't even need to give you guys an ETA for this. It's so simple. Look there, below that, cut. Right? If you accept below that, just cut until you reclaim. As long as you're above this, you don't need much. You don't need to put much into this at these prices. You just buy, forget. If there's somewhere that you can stake your Say, buy, stake, forget. Right? Easy. If you believe in it and you want to believe in it for the next bull run, buy, stake, forget. If you want to just buy it as a trade, buy, invalidation is below this. If it gets below, cut it. If it doesn't, just hold until like you see weakness, or if it's spot for long term, just hold until we either go back to higher targets or your invalidation hits. But it's so easy. It's so one directional at this level. It's actually crazy. Super easy for Say, guys. Super easy. This is insanely easy. Plus, Shark 2.24, right? You're back at your PRZ. If anything, this is a type 2. This is a type 2 return to your Shark that was created during the liquidation wick flow. So if you're not going to buy this here, where are you going to buy it? 20 cents, right? That's your target. You buy here, you've got nearly a 3x to the area where we were last looking at it, right? So yeah, Say looks insane, absolutely crazy. This is an easy bid in my opinion. It's so easy to bid. I know I don't need to keep saying it, guys. Even if someone is completely new to the charts, logically speaking, they should look at this and they should think, yeah, but why not, right? You literally ask yourself, why not at these prices? So that's say. And the other one was Tau. So I believe Tau for us hit the T2, and then it just the time it hit the T2 was the literal peak from where it actually started to crash back down. So I've got Tau in this list, or is it on the list? I think it's Focus V3. Aptos is another one I want to look at. Yeah, there you go. There's your T2. M shape, type 2, right? Death. I think for Tau, I mean, you're at range lows, but are they gonna be happy with range lows? You've hit the mid of the buyer seller zone. Is there an older chart than this for Tau? I don't think so. One sec. Tau's another one I want like a really nice bag of. So I'll go to Focus V3 here. I should have it right. What the? Yeah, I've got it. So what I'm going to do is I'm actually going to go here. I'm going to delete all of this. That was the last buy seller zone I bothered to even put down, because below this is going to be the macro read right here. You literally hit the macro read. I mean, easy to manage your risks. Again, aggressive selling. Below 147, you cut. Below 147, you cut your Tau until you reclaim it. But as long as you're above this area, it looks the same as say, right? I think many things are going to be doing this right now, where you have a candle that's showing you like a absorption pattern, because there's been so much aggressive selling. There's bound to be some respite, right? So as long as you're above 147 to 162, I'd target 214 again. That could be your next level high, right there. Because on the 3-day, that's going to be demand zone. Yeah, right there. That's a textbook demand zone. So you could go, turn down to resistance, and then have one more drop to lower prices. I'll be targeting that, I think. But yeah, easy to manage risks here for Tau trade. If it's for spot, like I said, just buy and hold. For spot, I always just, unless you're using spot to trade, the way I do it in a bear market is I'm not buying spot to be like, oh yeah, I'm going to sell this in a month's time. Typically speaking, if I buy spot, it's going to be because if it's a bear market, I want to wait for the bull market to come back, right? That's what leverage is for. If you want to trade, just use leverage. Like, you don't have to, you can trade with spot. I'm not saying don't trade with spot. I'm just saying why do. Personally, I use spot for long-term buys, and I just use leverage to like trade in the meantime. But that right there, for Tau, between 147 to 162, as long as you're above that, you're fine. Do try and target towards 214, in my opinion. And then you can readjust from there. Below this, I'll just get out of it until more structure comes, because it's probably going to be around $86 if you go below 147. Is there anything else on Tau? One sec. Yeah, I mean, you're at the bottom of your channel on log as well. Not on linear, but on log you are. So, yeah, as long as you can stay above this sort of, even on this, right, 162 is the 2024 low. And then on one target we do have on log is 87, right? Look, the macro read is at 87 on log. So if we lose this area, I won't be surprised by double-digit tau. But as long as this holds, yeah, that'd be what I was targeting, 207-ish to that box there. So, okay, that is tau and say. Both look really good for a buy here. You can try for high time frame bids, but for high time frame bids, I wouldn't go all in yet, simply because the only way you're going to go all in is if you're happy with your position sizing and the stop loss, right? Your stop loss is going to be below 147.74. But you always have more time than you think to accumulate on the higher time frame. So I'd probably stick with 20-40-40 if you guys are wanting to get into any particular projects. Because remember, we are not on the right side of the V, therefore you do not want to be fully positioned. Right? Again, not financial advice, but I'm just saying it how I personally see it. If you're not on the right side of the V, what's the point being fully positioned counter trend, right? So just do 20-40-40. Or if you have your own system, just do that. Entering is not the hard part. The hard part is just managing your risk and your emotions, right? But you guys, I've done the risk part for you because you know what the invalidation is. I would never ever give you guys an entry or a trade without invalidation and validation triggers. We currently have a validation trigger. As long as you're above 162 to 147, you are valid to try and hold some tie. If you lose 147, that's your trigger to get rid of it, right? And you're trying to target what? 214 to 207-ish, this area right here. So we looked at tab, we looked at say, and I look at the rest of them. XVG, this still looks insane, bro. Honestly, I'm not even lying. This looks good, man. Oh, what's going on? This thing's just... M shape's completed. It's, just going sideways, steadily grinding up. I think I'm gonna have like a just set and forget back for XVG because I can only go off what's here right now, right? Everyone loves laughing at charts when things have already gone down, or giving commentary on charts as everything's already gone up. Very few people are actually looking at charts live and telling you right now, right now as far as the data goes with what we have, this looks good, right? And if it breaks down in the future, it breaks down, but we can't know that until it happens, right? There's nothing here telling us, oh yeah, it's going to break down in this state. Right now, this looks good. It's holding up better than most of the coins out there, and I don't know why. But I don't need to know why. All I need to know is, can I manage my risk? Do I have a reason? Yes. And it's this. As long as I have that, it's like why I give you guys that Telcoin entry, right? God knows, if Telcoin was going to do anything. But logline, meme line hit, boom, 100% in like a day, right? Not even 100, it was like nearly 200% move in a day. So that's the kind of thing we're trying to aim for, which is why, like I said, I just stick to pure technicals. But another one I'm interested in is Zen. Damn, bro. Look at this. That's a rate of the range low from 2023. In fact, I believe you have raided the 2020 low as well. No respite for the bulls here. But honestly, yeah, I don't think Bitcoin has that much more to drop. If we get one more spike down, like I said, from the earlier this stream, it's going to be towards the 58 area, 58 to 54-ish, I think, right? But I really hope we get a visit back towards like the hundreds again for a lower high, for a macro lower high. Stop out all the people that are short, like within this down period range we've been in, and then after that give us like a proper crash. That's what I'd love to see, honestly. But yeah, there's loads. I'll do a proper altcoin stream next time because, like I said, this one took a bit longer than I thought it would. But that's fine, guys. If you have questions, I'm here to answer. That's what I'm here for, right? Aptos, have you raided? Please tell me. Oh, there we go. We're waiting for this 2022 low. Aptos raided. Again, look, if you want to enter a coin, you can put some money into Aptos and just forget about it. Your invalidation, just put your stop loss below that wick there. If you're wrong, you're wrong. If you're wrong down here, who the fuck cares? Right? Who cares? No one gives two shits. No one's going to laugh at you if you buy here and you're wrong. Right? Because where else are you going to buy? Like on the chart, this is the one area you have. So say, Aptos, Tau, you can see how easy it is to manage your risk for this, right? Take a look at FET. I know this doesn't look good when you look at it like this, but remember, the way we're looking at it is this, right? Where's FET? Look. And all of a sudden, the perspective doesn't really matter, right? Because look, as long as this is held, guess what? You're fine. If you lose this line, yeah, you get out, right? But otherwise, you're at the point where M-shapes are completed. We know M-shape reactions don't have to be straight away, right? Because remember, harmonics are not dependent on time. Not the way that I do it anyway. So as long as this sort of trend is held, we're fine for FET. right? There's many coins like this. Asta has it hit the 886. Oh, it's gone past the 886. This is something I'd want because at the end of the day, I don't want to bet against CZ. If history saws anything, he's gonna make his projects do well. So Asta's one, right? If you reclaim the BAT 886, for example, right? If you can reclaim the BAT 886, get some key levels back in here, show some strength, right? Reverse trend. There's loads, but Asta's another one I look to get into spot. There's loads. Right? There's loads. CVX has held up extremely well. Extremely well. That yearly low is still being defended. It's just been going sideways, like CVX. But the yearly low is still being defended. 2024 low. But yeah, there's loads of alts, guys. Pretty much everything you look at right now are going to be in the gutter. This is eGold, right? Literally, the liquidation wick lows have been fully filled now on pretty much everything. So honestly, like I don't see why it would keep nuking. If it does, like fair enough, like whatever, you know. But you are placed. Don't be scared to take some bids here. Not financial advice, but look how easy it is to manage your risk. There's very few opportunities. Think about how many times you've had opportunities like this where you can accumulate projects and macro lows with such tight invalidations. You don't get many chances like it. You don't have to go all in, right? But if it's a little bit for spot, especially, right, for something for the long term, it's very easy to even like if you don't go all in and you have such tight risk management on top of your partial position, even if you're wrong, you're hardly going to lose anything, right? So the risk management, how you do that is completely up to you, right? It's not my job, nor is it my duty to be like, you guys need to put this amount in at this price because everyone has different port sizes, different risk appetites. It's my job to tell you guys where the key levels is and what the invalidation and validation trigger is. That's my job, right? And it's your job to simply watch for that invalidation trigger or the validation trigger at key areas. And when it's time to get out, you get out. And if there's nothing telling you to get out, just stay in until it's time to get out, right? That's why I give you both a validation and an invalidation trigger. And I also give you the key levels to look around for. I don't give you a vague entry like, oh yeah, this zone and blah, 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 blah. It's very clear line in the sands and it's very clear triggers like breakout, reclaim, or acceptance above. I've already shown you guys, like everyone here has learned my system. You guys know what to look for when it comes to like, footprint charts, when it comes to accumulation, trap traders, so on and so forth. You know what to look for. So it's your duty to simply just, once you've learned that through the recordings, right, the core and the advanced recordings, to simply wait for prices to go to key levels. And then just once it gets there, is to pull the trigger or to not pull the trigger and set your invalidation/validation, your risk based around that key level and how much of a position size you're going to take, right? Because I can't tell you what position size to take, obviously, because, that's got to be something you can do, something you can hold, right? But yeah, Aptos, I'm going to put this one real quick. And this, the other one was Say and Tau. And Say. One sec, where is Say? Yeah. Yeah. But yeah, Say looks insane as well. Not insane because the chart looks good. Insane because your risk management looks cracked, right? Yeah, it's already in there. So then let me go back to this. Aptos. Tau. Say's already in there. Perfect. That's a few coins, guys. A deep dive into Bitcoin. Hopefully this was helpful. Nice. 100k, what should I do? Put it all into Dogecoin, bro. Right. My days. Okay. Yeah, so the next one I'll probably do around Wednesday. And then that one I'll look into more of your alts. And if you guys have alts you want me to look at, put it in like the chart request section. I'll make a note of it and we can go over it next stream. I'll create like a watch list of your chart requests. That way it's easier. But yeah, thank you all for the good sharing today. Quite a busy stream today. I'm going to get some food. I'm going to hit a workout and then I'm going to go to sleep. Actually, no, screw the food. I can't eat too late. I can't go to sleep otherwise. I'll just get a workout and then I'll go to sleep. But thank you so much, guys, for your time, for joining in. Hour and a half. I'm getting a bit better at timing, right? Normally this would be like 2.5 hours long. But my throat's fucked. I can't keep talking any longer. I keep holding in cough. I've got an ab workout going on. Literally just trying not to cough as I talk. So I'm going to stop this recording. Yeah, one second. Let me just see what is lemonade at right now because the markets are open. Has it dumped some more? Stocks. This one. Oh no, we've got a nice little pop up today. That's fine. But yeah, this was one of the best stock calls this year. In fact, in terms of just pure execution, this was insane accuracy. Printed on that short. But okay, guys, thank you very much for joining in, and I'll see you guys soon. Yeah, Estee Lauder looks good. I'll see you guys soon. I'm gonna end this here now. Stop keeping you hostage on the stream. Right. Love. Thanks, guys. Bye, you shut up, bro. See you guys soon. Bye bye.